This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Pricing disputes between buyers and sellers as Western sanctions have complicated trade in Russian oil are expected to delay sales of the Far East oil-grade ESPO blend on which China relies, traders said on Tuesday. The difficulties with ESPO add to the problems of trading other Russian oil, including Ural's flagship blend, as Western sanctions make it hard to finance deals. Almost none of the ESPO blend cargoes for loading in May has been offered so far, when normally the trading cycle for the grade should have been completed by around this time of the month, they said.
Energy and commodity markets are in shock after Russia's invasion of Ukraine, the world's top trading firms said on Tuesday, warning of gas and diesel shortages in Europe and economic recession if Russian flows fall further. Prices across gas, oil, metals and agricultural markets have soared since the invasion and become so volatile that companies have had to cut traded volumes owing to strained liquidity. The chief executives of three of the biggest energy traders, Vitol, Gunvor and Trafigura, said the gas market in particular had become dysfunctional owing to unmanageable margin calls.
Moving on to the top news in the energy sector.
A growing number of European countries are cutting fuel taxes to lower surging pump petrol prices. The move brings respite to motorists, but environmentalists say it flies in the face of commitments to curb global warming. Rising international oil costs, exacerbated by the war in Ukraine, have driven petrol above €2, $2.21, per litre in much of Europe for the first time, placing a huge burden on car owners and industry. Fuel costs triggered France's Yellow Vest protest movement in 2018. They are always a sensitive political issue, and governments, keen to head off motorists' anger, are now taking action.
Saudi Arabia's cabinet emphasized on Tuesday the essential role of the OPEC Plus agreement in bringing balance and stability to oil markets, Saudi state news agency SPA reported. The statement, a little over a week before OPEC Plus is scheduled to meet, indicates little chance the grouping will decide to raise oil output at a faster pace. Several major consuming nations, including the United States, have called on producers to raise their output at a faster rate to help calm crude oil prices, which have soared on the back of Russia's invasion of Ukraine. OPEC Plus, which groups the Organization of Petroleum Exporting Countries and its allies including Russia, has so far resisted calls to increase supply. Next, we have the top news in metal markets. The London Metal Exchange has no current plans to ban from its system metal from Russian producers, such as nickel and copper from Norilsk nickel or aluminium from Rusal, it said on Tuesday, despite calls from some members to do so. Western countries have sanctioned Russian banks and wealthy individuals connected to President Vladimir Putin since Russia's invasion of Ukraine last month, which the Kremlin terms a special operation, but so far there are no restrictions on buying Russian metal. Russia supplies about 10% of the world's nickel, 6% of its aluminium and around 3.5% of its copper. A ban on Russian metal could lead to shortages and further price surges at a time of rising inflation around the world.
Global lithium-ion battery capacity may rise over five-fold to 5,500 gigawatt-hour, GWh, by 2030 from 2021, consultancy Wood Mackenzie said on Tuesday, while cautioning that supply of batteries will remain tight this year. Electric vehicle market accounts for almost 80% of lithium-ion battery demand, and high oil prices are supporting more markets to roll out zero-emission transportation policies, causing demand for lithium-ion battery to skyrocket, Wood Mackenzie consultant Jiayu Zheng said in a report. U.S. carmakers Ford Motor Company and General Motors County recently announced their EV expansion plans, with Ford set to launch 7 electric models in Europe by 2024 and deepen its partnership with Volkswagen to produce a second EV for the European market.
We will now look at the top news in the agricultural sector.
Argentina's government will allow new soy oil and meal exports to be registered from Monday onwards after hiking the tax rate on the two products, its main source of foreign currency income. The South American country, the world's top exporter of processed soy, halted new overseas sales of soy oil and meal in mid-March before hiking the tax rate to 33% from 31% previously in a bid to tamp down domestic food inflation. Registrations of the sworn declarations of sale abroad, corresponding to soybean meal and oil, is open from 000 HS. On March 21, 2022, the Agriculture Ministry said in a statement late on Sunday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.